Now, you don't have to be good at math, I promise you, because I'm going to guide you step by step. Stay tuned. To demonstrate how income tax owed is calculated, we're going to use this taxpayer profile. The current tax year is going to be 2025. The filing status will be single, and we picked Georgia, which is a state with income tax, and then age 35, which means he's not yet at retirement age. The annual salary is going to be $80,000, which he gets in paychecks every other week, and you see the breakdown here. Now, most paychecks are broken up into 4 buckets. That first layer is your FICA, which includes your Medicare and your Social Security. The total of these two combined is always 7.65% of your paycheck, which in this case ends up being $235.39. The next buckets are withholding for federal and withholding for state. The withholding amounts for each can be calculated manually using the tables in the resources named here on the right, but a much easier and faster way is just to go to paycheckcity.com and use their salary calculator. I calculated it manually myself, and it matches up exactly to the tables. So first, you'll choose free salary calculator. Then you're going to enter the gross pay, which for our example is $80,000, and then you're going to choose annually. The next is you choose biweekly, since recall our fake taxpayer is paid every other week. Then you're going to choose the box that says use the 2020 W-4 because that's the latest version of the W-4. And then finally, for this example, we're going to choose filing status single. You scroll all the way down on that page and press calculate, and you'll see the calculated figures. So you'll first see the federal withholding, and then the Social Security, the Medicare, the state withholding, and the amount of take home, which is the net of all the taxes that you've paid. This is the full breakdown of all the buckets of the taxes paid, and then your take home pay for each of the 26 pay periods. Now, at the end of the year, we take the sum total of all those taxes paid, and we can see how much total withholding. Now, keep in mind, the withholding is all that counts for calculating the end of your taxes, not how much you paid in FICA. Also, the federal and the state are generally calculated the same, so for demonstration purposes from here on out, we're just going to focus on the federal, and you can apply these same steps to the state taxes owed. So here we can see the total federal withholding, or better yet, the total amount of federal taxes our person paid is $9,213.88. Now that we know how much he actually paid, we need to find out what he should have paid. In other words, what is the taxes charged to him? To get this figure, we need both the standard deduction and the tax rate for filing status single. Now, the standard deduction is easy to find at the IRS website or just with a simple Google search. We discovered the standard deduction for filing status single in tax year 2025 because it changes every year. And for at an age less than 65 years old, it's going to be $15,000. Now we need to find out the tax rate. Again, just like the standard deduction, the tax rate can be found with a simple Google search. Note the tax brackets continue higher than what I've included here, but we don't need more than we have just for this example at $80,000. Now, the U.S. employs a progressive tax system, meaning you pay more as your salary gets higher. So the way to read this is to think of each layer as up to. So the first portion of income up to $11,925 is taxed at 10%. And then the next layer of income from $11,926 up to $48,475 is going to be taxed at 12% and so on. But we don't apply the tax rate to the gross salary of $80,000. We apply it to the reduced salary after we apply those deductions. And in our simplified example, that will be just the standard deduction of $15,000, which brings the taxable income down to $65,000. We then apply the tax rate for each bracket up to the amount until we get to $65,000, which is in the 22% bracket. So the 22% is going to be applied to the amount from $48,476 up to $65,000, not that 103. Here we see the formula for applying the tax rate to each layer of the $65,000 of taxable income. And those layers add up to a total of $9,214, which is the amount of taxes charged to our taxpayer. Recall, he had withheld almost the same amount and ends up almost breaking even with just a tax bill of 12 cents. Now, this is the ideal situation, as you don't want to owe and risk paying penalties and interest, but you also want to be able to use or invest the extra money from your paycheck throughout the year, as opposed to having it sit at the IRS because you overpaid. I hope this gives you better insight into how your personal income taxes are calculated. If you have tax issues, whether with filing or responding to an IRS notice, and you need help, book an appointment with Tax Navigator Solutions. Let us be your guide. Otherwise, stay tuned for part 2 of this series, where I demonstrate how multiple jobs for singles and couples can lead to insufficient withholding on the W-4. Ciao for now.